The dollar versus Canada is trading to new session highs and trying to break above the recent highs. I'll talk about that and more in this video, so let's get started. Looking at the hourly chart, the price is stretching above previous highs. Yesterday, the high price came short of last week's high, right through here at 1.39575. I think the high yesterday was about 1.3956 before the market rotated to the downside. The ups and downs in trading here today has led to more up buying momentum in the North American session, and that is stretching the price above those two highs. But you see this green line here, right here, this represents the overlay of the 200-day moving average. That level comes in at 1.39641, and that's going to be a key target to get to and through. If we're able to get above that level, that opens the door for further upside momentum. I'm going to go to the daily chart now and take a look at what that 200-day moving average looks like over time. And you can see that the last time the price was above the 200-day moving average was back here, back on April 10th, where the price moved sharply to the downside, breaking below that 200-day moving average, and giving way to this swing area right through here, where we started to develop both the swing lows and swing highs going back in time. I'll outline some of those levels through here, where the high price came in here, came in here. This was more of a ceiling. Then we broke above the ceiling, and it became a floor here before moving to the upside through here. Came back down to that level, fell below the level, used the level as a ceiling right here. It got a little wonky here on the ups and downs above this swing area, but then reestablished resistance here before moving to the downside. And it was a few weeks ago, 2 weeks ago, when the price came up to the low of that swing area, found willing sellers. Last week we did the same thing, found willing sellers, and this week we're back in that area. So getting above the 200-day moving average and then getting above the 1.39785 level and staying above that level would have traders looking then toward the 38.2% retracement. That 38.2% retracement is of this move down from the 2025 high to the 2025 low. In my book of technical analysis, you need to get above that 38.2% retracement to show that the buyers are taking back control after this trend move to the downside in 2025. Now that level happens to also correspond with some levels through here as well, increasing that level's importance going forward. But so we have the framework, the roadmap for further upside momentum here. Buyers are trying to make a play. They do need to get through these levels, however, and push up toward that 38.2% retracement in order to keep that momentum going. What is helping out from a bias standpoint is that we are seeing oil prices move lower. If we take a look at the price of oil here over the last week or so of trading, we've come back down. This is a daily chart, come back down from the 50% midpoint of this move to the upside. This is the April low to the high price that we saw, I guess, in the month of June or July. The 50% retracement held the resistance right here, fell back below the 100-day moving average earlier this week, and are now breaking below what is a swing area through here, which was home to a number of different swing lows going back in time over the last few months of trading, where you can see the number of different times the market came within this yellow area and found support. Today we're trying to break below that level, increasing the bearish bias for oil prices. There is an OPEC meeting coming up. Lower oil prices tends to hurt the Canadian dollar, lead the dollar Canada to move to the upside. So that may also be a contributing factor for this pair's momentum in the upward direction. So that's my look at the dollar versus Canada. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.